Welcome to this Click Explains video. This time I want to take on a short guide to economic recovery patterns and just explain why, in the media in particular and on analyst reports, you'll find reference to a range of letters of the alphabet, some of which make more sense than others. So, the background to this would be what? Well, in a nutshell, recently the Bank of England very publicly changed its mind on the future path for the UK economy. Chief economist Andrew Haldane has dampened hopes of what he calls a V-shaped recovery. So the question then is, what is a V and what are the alternatives? And the third hidden question I'll deal with is, what should investors make of all this? So first of all, the classic V, as it's been called by some analysts. Well, the shape of the letter of the alphabet reflects essentially the economic expectation here, and usually this references what people think will happen to an economy or a group of economies, or indeed the whole global economy in the future. And a V is a sharp drop in growth, followed by an equally sharp recovery, as the letter of the alphabet might suggest. And it's based on the idea that the damage caused by COVID-19 is largely temporary, so short and sharp. Now, stock prices have certainly mirrored that sort of belief in terms of where they were just a couple of months ago compared to where they are now. The question for most people is whether the underlying economy will actually follow the same trajectory. And the Bank of England, which until recently had been fairly bullish about the way things might pan out, recently changed its tune slightly. So that brings us on to what I could call, and others call, the new U. Now, as I mentioned, recently the Bank of England has sounded more cautious. It sees a recovery to pre-outbreak output and GDP levels taking place. That's the good news, but not until the end of 2021. For a V, you'd be looking for something to happen a lot quicker than that, so the U is just a handy way of summarising the idea that we will get back to or beyond pre-outbreak levels of output and overall wealth and growth, but it'll take a while. And therefore analysts have started referring to the V as a U, if that makes sense. However, in a recent Bank of America survey, another letter of the alphabet made it fairly high up the rankings, and that is what I've called the double dip W. Now this one is where you get a V or a U, followed by another one to create a W shape, hence the name. Now that suggests that having recovered, if you like, the first time, something then happens to send an economy or group of economies back down into the second half of the W, if you like, with a view that eventually there will be some kind of long-term recovery. Now the question then becomes, if you believe in the W shape as it's called, and you think we're currently on the first half of it, so we're in the first V or first U, what's going to trigger that second downward slide? And, well, there are a number of candidates. A second outbreak of the virus before an effective vaccine comes into play is definitely one. A short-term inflation spike, and I've covered this elsewhere, caused by disruptions to the supply chain, thanks to the virus, plus suddenly restored demand and an imbalance there. And of course there's the failure to restore jobs, the ending of furlough schemes, the ending of corporate support mechanisms, and so on. And any of those, or a combination of those, could see an economy or group of economies basically go back down some sort of version of the initial V or initial U. Then we come to what one analyst recently called the Hellish L. Now whilst most people wouldn't want this to be the way that the economy pans out, it is worth knowing what it is, simply so that when you read about it you'll know what people are talking about. So here, pessimists, and they are pessimists, say that coronavirus has the power to permanently dent the global economy's GDP growth rate, and as such we may never get back to previous levels of output, growth, wealth creation and so on. And this is the doomsday scenario, if you like, based largely, I suggest, on the idea of multiple outbreaks, multiple iterations of COVID, economies struggling to ever get post-lockdown, as I call it, central banks unable to do any more to sort of stave off the recessionary impact of what's taking place, and you get globally, therefore, almost a permanent state of lower and sluggish growth. Now, just to reiterate, This is by no means everyone's view, thank goodness, but it's out there. A variant on this theme, which other people are saying could be what we're looking at, is the hockey stick. So in my Hockey Anyone section, I just want to summarise that one. Hockey stick, why? Because, well, we have seen a sharp drop in GDP growth. But what people who like this shape or think this is the shape that's coming say is that will be followed by a relatively long, relatively slow recovery, eventually to pre-virus levels, but it could take years to get there. And those people who think that the hockey stick is the most likely shape of the economic recovery per se, view the world rather differently. They say that actually significant changes have taken place. The virus has changed the way we work, the way we operate, the way supply chains lock together. But we're adapting creatures. We will get through it. We will change our working practices, change our supply chains, change the way businesses work. It'll take some time, but basically we can expect to see a longer, more drawn-out recovery from the position that we hit just a month or two ago. Now some closing thoughts for investors. I've covered 5 letters of the alphabet there. There are 1 or 2 others, but those 5 are the ones that you tend to see most often. So what should an investor make of all of this information? Well, first of all, remember that although these sound quite snazzy, these V's and U's and W's, the truth is nobody actually knows what's going to happen next. You are looking at a series of best guesses. And neat, although these letters of the alphabet are, they don't fully encapsulate, be fair to say, the sheer complexity of what's going on at any point in time within the global economy. In terms of who thinks what, well, Bank of America's latest survey suggests that around half of the people they asked expect a U-shape. That's sort of Bank of England thinking, if you like. And about a third see a W, based on one of the triggers for the second downslide that I mentioned earlier. But as an investor, my advice would be don't worry too much about these letters. Don't get too drawn into speculating about the macro picture going forward. Stick to a long-term approach. Don't get drawn into market timing. And as usual, don't get drawn too far into siding with the bulls or the bears, because 50% of those people at least will be proved wrong, and therefore anybody who bases their investment strategy around one of those fixed positions could well be disappointed. Any questions? editor@killick.com, and if you'd like to see some more videos around the kind of macroeconomic theme, then it's killick.com/learn and the Investing Principles tab.